Hello and welcome. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. With me are my colleagues Amit, Ranjan and Kartik Malhotra. Gentlemen, good morning. Let's begin with markets. Markets opening in the flat this morning, Kartik.
That's right, Shweta. Good morning to you. Hi, Amit. Yes, markets have opened marginally low in the red. I think what we have seen is the sell-off pressure that has engulfed the Asian markets. Asian markets are down about 1% or so. We've seen a little bit of an impact on the Indian markets. We can't really call it a blow because last when we checked, Nifty and Sensex were down just about 0.3% or so. Nothing really scary out there despite the gloom of red which is on the screen right now. We see that mostly all indices are marginally low this morning. Nifty 50, Sensex both down about 0.3, 0.4% when markets opened at about 9:30 a.m. Of course, the contrast that we are seeing is in the small cap space. I think investors who got spooked with the high selling in Asian markets are seeming to find some solace in the smaller sized companies. But look at the indices on the right, the international indices. Look at US markets, Dow Jones, S&P 500, Nasdaq, all in the red. Even Asian markets, Nikkei 225, Hang Seng trading low this morning. So what we're really seeing, I think, in the US are fears of inflation. What we are seeing in the US are signs of another potential few more rate hikes. And that is propelling some sort of a sell-off, and as a result, FII inflows into India have been higher. I think net inflows have been over 700 odd crores. We are seeing a similar action in the DII space as well, about 2,000 crore rupees of inflows in the DII space. Despite these inflows, markets not really holding their ground, and more selling than buying happening in trade this morning.
All right, let's get in Mohit Gang from Moneyfront into this conversation. Mohit, good morning to you. What's triggering this sell-off in the Asian market? I mean, Indian market still holding strong there, but all major indices in Asia down by about 1% this morning.
Oh yeah, absolutely, Shweta. I think, look, the trigger always comes from the US markets, and I think the way bond yields have been rising out there, the US 10-year bond yield is almost at around 4.28, 4.3 odd percent, which is a fairly high level. And I think the Fed commentary was not so good last night, and which indicates that there might perhaps be more rate hikes out there in the open, right? And which is what is spooking the global markets. If you see the dollar index yesterday, it's touched in high of almost 103, right? So dollar going up, US bond yields going up doesn't augur very well for the global markets, right? And even the commentary from China has not been great. Chinese markets have been slowing down. You saw a rate cut in the Chinese, which the Chinese government did, Chinese central bank did, in fact, by around 15 bips, which was a fairly large rate cut by the Central Bank of China. So I think globally the commentary is not good, though I should always caveat this, that the Indian and the US markets are the two only markets which have been sustainably doing fairly well in spite of all the global commentary and all the things which are happening around us. So I think from an India's perspective, look, yes, these commentaries could upset the market trend or the market momentum for a bit, but I think the underlying current still remains fairly strong. If you see the FII buying which you were talking about, I think in yesterday's trade also there was a good cash FII buying. However, it is very difficult to point out was it because of the bulk deals and what was the actual number in the trades other than the bulk deals, right? So it's very difficult to split that number out. But even then, both the DII and the FII flows have been extremely positive, and the market trend still continues to remain bullish from here.
And in fact, yes, Kartik.
Mohit, I just want to get your view on the small caps. Do you expect this rally in small caps to continue? I'm not sure if we can call it a rally just yet, but do you see small caps outperforming the broader markets?
Look, it's very surprising though, but even today and yesterday, the mid-cap index has been higher, right? So even today, when the Nifty and let's say top 100 stocks have been showing down, the mid-cap index in the morning when I saw it was trading higher, right? And even the small-cap index, and which has been showing surprisingly good amount of resilience. Now the whole problem is at a very broader level, the index looks expensive now. The trade has played out fairly long, and I think the cream has been taken off the table. It's very difficult now to find companies which are still reasonably quoting at good valuations. There are opportunities galore, but yes, at a whole level, I think the index now is looking more expensive than it was 2-3 months back.
All right, and what are you making, Kartik, also of the Fed commentary, of the fact that in the FOMC meeting or the Fed meeting on 25th and 26th of July, Fed remains divided whether there's going to be a further rate hike or not. Inflation continues to be a major problem in the US, in India, other developing economies, China, Russia. What are you making of what's going to happen from Feds at this point in time? Will the rate hike cycle continue?
So Shweta, what I see is that, whatever momentum the Fed or any central bank wants to pick and whatever stance it wants to take, whether by way of tightening or loosening, what it could really impact is largely on the demand side, not as much on the supply side.
Okay.
Now, unfortunately, what we are seeing in India, the food inflation that we are seeing and overall the retail inflation, headline inflation is coming on the back of supply and a restricted supply. So even if, let's say, we'll come to the US, but even if RBI decides to tame inflation, food inflation, crude inflation, oil inflation is not something that the RBI can do much about because there are supply side constraints over there. What we are seeing in the US is a little different. In the US, I think there is definitely need to tame down inflation by way of constraining the demand side, and which is where perhaps further tightening could help. There is excess liquidity still in the system, and I think the government would want, or the Federal Reserve would want to suck that out slightly. And how many more cycles is the question? Now, of course, there is going to be division on both sides in the US because you have the you have the doves who are saying that, hey, let's not tighten it anymore, and industry credit offtake needs to pick up, and you cannot really have a banking system which in any case is right now being rated in the negative. In fact, Fitch has gone slow on JP Morgan as well, and some other smaller banks in the US also, not on the brink of collapse just yet, but definitely there are troubles mounting there. So for this entire US banking system to pick up, for the US economy to pick up, there are going to be some further tinkerings that will have to be done. You want credit to offtake, you want credit to go at certain rates, and for that some Fed intervention is going to be required. But at the same time, you are battling inflation, you are battling headwinds from a demand perspective, for which you may want to tame that demand a little bit. So I think that divisive nature of the FOMC is going to continue. But I have a feeling the hawks are going to persist, and you are going to see another few cycles of rate hikes, definitely.
All right, so that of course we'll have to keep a watch on. But coming back to India, some of the block deals that Mohit was referring to, one of them was of course with IndiGo. Run us through what has happened. Gangwal family has finally sold a part of its stake in InterGlobe Aviation, the parent company for IndiGo.
That's right. So Mohit, stay with us. I think it'll be interesting to have your perspective on these specific stocks as well. And let's bring up the graphics one by one. Let's start with IndiGo, since you mentioned IndiGo. Of course, Shobha Gangwal, the wife of Rakesh Gangwal, one of the co-founders of IndiGo, and of course the promoters did sort of engage in a public spat of sorts to a point that Rakesh Gangwal is no longer on the board of InterGlobe Aviation, or IndiGo as it is referred to. So Shobha Gangwal has mopped up about 2,800 crore rupees by selling about 3% of her stake in InterGlobe Aviation yesterday. Of course, this comes on the back of the family, the Gangwal family, up until the month of July, holding a 29% stake in IndiGo Airlines. Of course, the stake sale has happened in 3 batches yesterday. We've seen about 11.5 million shares going out in the range of 2,441 to 2,427 rupees a share. All in all, making Shobha Gangwal richer by a couple of thousand crore rupees. But what it is playing out on the stock this morning is not great news. So I don't think the markets are taking very kindly to the stake sale. In fact, yesterday also when we opened the show and we were talking about the Shweta, we saw that that IndiGo stocks, InterGlobe Aviation stocks were not doing too well. Even this morning, if we can pull up the stocks in action, we will see that when markets opened at about 9:30 this morning, 15 minutes into it, we saw InterGlobe Aviation was down and down significantly, almost 2% or so.
In fact,
trading
it's
at
picked up at
2466.
it's picked up at this point in time. It's up about 0.67%. So it's spared some of the losses.
Okay, so I think it'll be interesting to get Mohit in and understand what is really happening with the stake sale at InterGlobe Aviation, and how do you think, Mohit, the markets will perceive this? Is this a sign of the promoters, losing faith and wanting to cash out, or is there going to be likely more resilience with a further diversification of the stake in InterGlobe Aviation?
Look, so I think first of all, the numbers which InterGlobe reported this quarter were fantastic, right? The profitability and revenue numbers were at an all-time high, and there are enough and more tailwinds in this business, which is supporting the business per se, right? And today, as we stand, it's more or less like a duopoly market in the Indian context, and they enjoy a fair share of the market share out there. So on a macro basis, it looks extremely good. Now, what is happening in the company on the promoter side, honestly, it's very difficult to put a guess on what exactly is playing out. But my sense is a promoter stake coming up below 26% or marginally around there is not that big a negative for the stock. Honestly, if they continue to hold around 20+% or 25% whatever they continue to hold, I think that's fair enough. But what is plaguing the stock, perhaps, or what could be a big trigger point for the stock, is that Indigo, from their entire fleet, had almost 40 aircrafts grounded because of some engine problems, right? And there is further news that out of some around 135 or 140 odd aircrafts which they have, which with a P&W engine kind of, right, is not playing out very well for them, and there are some engine troubles, and they might have to further ground some more aircrafts, which can be a little drag on the stock in the near term. But otherwise, in terms of profitability, in terms of number, the stock has done fantastically well, and we continue. It's a fairly bullish call, given that you can play out these two triggers or these two things, which is one, the engine problem, and second, obviously, I remain very cautious on the global oil prices and the aviation fuel prices. So I think those are two things to look out for. But otherwise, I think on a whole, this per se promoter family selling some stake, trying to mop up some cash and all, I think in good markets, look, honestly, everyone does that, and promoters more often than not will do that. It's happening across few companies, so I think it's not very surprising for me out there.
Okay, so I think the troubles that you mentioned, which Indigo is facing, of course, with respect to oil prices, which will have a direct impact on ATF, air turbine fuel, as well as faulty engines and faulty aircraft grounded fleet, are issues that plague the entire industry per se. And Indigo, despite these challenges, continuing to command the lion's share in the Indian skies, and also I think the sort of frequent announcements that come of new international routes being added to Indigo definitely spell good news for investors of Indigo. And like Mohit mentioned, I think a stake sale by the family after the lock-in period expired in the month of July should not be read too much into as far as the stock goes.
All right, so that of course is InterGlobe Aviation, but another stock in news today is Adani Power, particularly because GQG partners have invested as much as $1.1 million in Adani Power.
$1.1 billion.
Billion dollars, I stand corrected. Billion dollars, not million dollars.
That's a
huge money,
huge
a whole
number.
lot of money.
So again, let's look at what GQG is really doing and how it's doubling down on Adani, and not just Adani Power. In fact, it has pretty much invested in every Adani stock which is listed in the markets. So the Adani family this time has sold about 8.1% stake, amounting to, like you said, Shweta, about $1.1 billion in Adani Power, and this has been picked up by GQG. In addition to that, of course, like I mentioned, this becomes the fifth company, Adani Power becomes the fifth company which the GQG investment group has invested into. The others, of course, being Adani Enterprises and other Adani Ports, Adani Enterprises, Adani Green, Adani Energy. Put together, GQG's total holding in Adani company stands at about $4.2 billion, which amounts to, at present exchange rate, about 35,000 crore rupees or so. I think before we come to Mohit on his view on Adani Power, let's just run through what GQG Investments really is. I think for our viewers, it's important to understand, and I'll take this opportunity to explain to them what GQG investments really are. So GQG Investments is a US-based company. It's an investment firm. However, it is listed in Australian stock exchanges.
Okay.
It was co-founded by Rajiv Jain, a person of Indian origin, in 2016. Now, there are varied interests that GQG has. Some of these interests, as it states on its own website, is to invest in high quality companies. And these are companies on which it is likely to find attractive prices and companies which promise a greater prospect in the future. So future growth prospects and high quality companies is what it really bets on. $92 billion is the total asset under management for GQG Investments. It has sold its stake recently in other Indian companies including ITC, SBI and Reliance Industries, but it continues to hold certain stake in HDFC Bank, in ICICI Bank and Ambuja Cement, which also incidentally is an Adani Group company, except that this time around, or whenever the Ambuja Cement deal happened, it picked it up from the open market and not really from the stake of the family that owned the stake in Ambuja Cements. So so news coming in of about $1 billion+ worth of investment, amounting to about 9,000 crore rupees in Adani Power. And so it further cements or powers up, shores up GQG's investments bets on Adani ever since the Hindenburg saga played out in the month of Jan.
I was just about to talk about that, because this has come on the back of Hindenburg, after Hindenburg, and GQG here touted to be investing in companies that are high quality, that
and
will fetch good, well priced, will fetch good returns, have future prospects. In a sense, also, it just augurs well for Adani Group and boosts confidence for investors.
Well, I think, definitely. I mean, it augurs well because there is cash inflow for the Adani family, right? And for the company per se, because bulk deals are being picked up at market valuations. But the beauty really is that when Adani was trading in the month of Jan, and after the Hindenburg research report came out in the last week of Jan, you saw the stocks really tumble down, and they continued going down till all the month, the entire month of February and March. It had ebbed out. And that is when GQG made its first move, right? Even today, I think the Adani Group stocks, their valuation is perhaps, not more than 60-70% of its peak in the month of Jan. And consistently, 5 tranches of bulk deals across various Adani companies by GQG pretty much suggests to the investor sitting here that there is something that GQG knows about Adani stocks and is very bullish on those stocks picking up and going back to their pre-Hindenburg research report levels. And let's look at the Adani stock. If we can pull up the stocks in action this morning, and we've tried to pull up Adani Power in that.
Adani Power is up at the moment by 2.34%.
Right. So I think it was up about 2.5% or so when trade opened this
morning.
So
up about almost 2% this morning. That, of course, is Adani Power stock. News auguring well for investors, boosts confidence there. Let's quickly get in Mohit into the conversation. Mohit, investors are taking positively to this deal.
Oh yes, I think absolutely. Look, it's a well-known thing that Adani Group per se is trying and diluting some holdings, whether in personal capacity or trying and getting more institutional investors in the company to manage the liquidity scenario post the Hindenburg saga. And they've been fairly successful at it. Honestly, I think GQG as a group has come into play in a big way. And as you were rightly pointing out, they've picked up stake in multiple Adani Group companies. And they have come in at a time when the stocks were actually badly beaten down. So from a valuation perspective, look, it's totally dependent on the way you want to look at it. If you kind of look at it from the peak valuations that these stocks were trading, yes, it's a fairly reasonable price of entry right now. But if you try and compare it with the peer group, let's say an NTPC or a Power Grid or JSW Energy, perhaps, you're still quoting at a fairly high premium. On a price to book basis, I think Adani Power would still be quoting at around 7 to 8 times odd, whereas an NTPC or a Power Grid would quote at around 1 to 2 times on a price to book basis. But you can always argue those are government companies, this is a private group company, and plus much better at execution, so on and so forth. So I think on and all, it's extremely positive for the group per se, for the stock. It's a vote of confidence, obviously, which comes in at the right time, and it's much needed liquidity and capital infusion in the company to further bolster growth. And I think they're also trying to focus more on their core areas and trying to divest out of non-core businesses, which also has been quite evident in last few months. So I think on and all, it's extremely positive for the stock.
All right, positive for the stock. Another stock that is in the news is JSW this morning, also for the fact that GQG also invested in JSW.
Absolutely. So has picked up about 1% or so. GQG investments had picked up about 1% in JSW Energy. I think it also shows that energy sector, power sector, transmission sector is something that GQG is bullish on and is looking at the right price to pick up multiple stocks, not just limited to the Adani Group holdings, but even beyond Adani. Energy seems to be something that GQG is finding some sort of interest in. So has picked up about 1.02% or so at 345 rupees a share. In fact, if we can go back to the original graphic, we'll just see the price at which it has picked up. So at about 341 rupees a piece, and 570 crore rupees worth of shares in JSW Energy have been picked up yesterday. But what also happened on Monday when markets opened this week was another acquisition of about 12 million shares by GQG in JSW Energy at about 345 rupees a share, raising about 411 crore rupees. So within a week, the second investment by GQG in JSW Energy.
All right. Mohit, I think we would somewhat agree with my colleague Kartik here that GQG seems to be interested in a lot of power companies as well as energy companies in India, a day after that news of Adani, and in fact on the same day we also hear of GQG picking more stake in JSW.
Oh yes, totally looks like, and I think power is one sector where government is trying extremely hard to reform the sector, trying and cleaning up the books of the state-owned power corporations and so on and so forth. So I think power is a place where we will see incremental amount of reforms, and it's a bet on Indian power sector per se. I think where GQG is trying to latch up here, and honestly, I think. Per se, in terms of results and numbers, if you see, JSW was a slightly muted show. The revenues were much higher, but in terms of PAT and EPS and everything, they saw a downfall or they saw a degrowth from last year comparatively. Even their debt to equity ratios have gone up significantly over last 1 year. Perhaps indicative of much more capex which they are wanting to put in. So I think it's good overall for the power sector. It's good overall for these two companies that they've gotten a good marquee name or a marquee investor as a portfolio company. So overall, yeah, I think it's fairly positive. And JSW stock per se has risen tremendously from this year March. Honestly, I think from a low of around 200 odd rupees, it's gone up multiple times in last 4-5 months.
Okay, Mohit, but the JSW Energy stock is down by about 3.17% this morning. How do you explain this?
Look, I think the stock rose up yesterday, and I think it's more about forming a base now. Whatever was to be taken off in terms of the deal positives has already been picked up by the street yesterday, and maybe some bit a little in run up to the action, right? So as I told you, last 3-4 months have been extremely positive for the stock. So now I think the news is already factored in, everything is there in the price. It's more about execution on the ground now. So.
All right, more about execution on the ground, and JSW Energy stock there down by about 3.17%. It did manage to rake in about 12.97% gains throughout the week. So I think Mohit is referring to some sort of correction there in the JSW Energy stock.